Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday Market Moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing me to do work that I find meaningful. Thank you for giving me the most valuable commodity you have, your attention. I promise to do my very best to give you a return on it. Alrighty, let's go to the charts. Starting out as always with the S&P 500. Still climbing into the clouds, up about 0.7 for the week. We zoom in here on the daily. We can see it's still riding the 10 and the 20 moving average. It's still going up, and why wouldn't it? A circle is still round, correct? Just to give you an idea of how overvalued this is, one metric I like a lot is how many hours does the average person have to work for one share of the S&P 500, and the average over a long period of time is 30 hours per week, and we have clipped 194 hours for the average person to get one share of the S&P 500. So looks like a screaming deal. The DXY is up about 1%. That super reversal bar is playing out, broke through the 200 moving average, is touching right on the 400 moving average right now, coming up on some real resistance around 105 or so, looking like it might roll over, but that is to be determined. If it does, then the next major level of support is going to be around 103.75, somewhere right around this 50 and 200 moving average. 2-year yields, pretty much flat for the week. 10-year yields about the same, hitting right on this 200-day moving average. And the 10s minus the 2-year yields is playing out just like we thought. And we think that it's going to exit this zero line right here and get out of clown world and move back into normal times where long duration debt pays more than short duration debt as soon as the Fed starts to pivot. And 1-month treasuries still paying north of 5%, just slowly climbing down here. I mean, this was 5.4 not that long ago. Now we're at 5.3. So this is probably going to start rolling over and we'll have to put our money somewhere else. But in the meantime, 5% is pretty good. TLT just hitting right on this 200-day moving average and the 50 moving average. We need yields on 20-year treasuries or 20-year bonds to start going down. Then the value of this will go up and then we will exit stage left. Story of the week. Gold is up almost 4%. We made a new all-time daily high, a new all-time weekly high, a new all-time monthly high, and a new all-time quarterly high, closing the quarter, first quarter of 2024, closed at 22.38, looking amazing. Stephen wants to know, he says, thanks, Steve B. Great program and learning. Thank you. He says, if you ever have training sessions or managed options, I would be interested in getting info. I've been getting a lot of emails and other comments on the same thing. If that's something that interests you guys, I don't have a program like that right now, but if that's something that interests you, let me know. Put them in the comments below. Over the past couple of years, I've been accumulating mining stocks at good prices, still well up on some. In your opinion, is it a bad strategy to gather good info on commodity stocks, narrow down to which ones you want to watch, and wait to deploy capital for the first time as the major stock market correction takes place? Well, you could. The thing I see with that, Stephen, is let's say we did that with gold, and we're waiting for gold to have a correction here and the in what we believe is going to be quite a correction in the general market. You could, but what if gold runs up here to 23 and then the correction comes back down and it only goes to 2000? But you've been paying attention to this since it was back at 1600 back here. I think at least the strategy that I'm employing is just keeping 20% cash in those rolling 1-month treasuries like we talked about, where every week they come due and you get more cash that you can either roll back in or you can deploy. So I just like keeping 20% in there in anticipation of some correction like that. Then we can start deploying it wherever the deals are. But if you just stay out of the market and all you're in is cash, you could miss a heck of a run. Same thing with silver. If it goes up to 26 and then corrects back down to 22 and then goes up to 28 and corrects down to 24, if you're playing that game when the big crash happens and you want to deploy it all at the cheapest point, we can't see the future, and you could be missing some. So I like to be about 80% invested right now, 20% in cash, and that 20% you're holding for what is probably going to be a monumental correction in almost everything. This one's interesting. Gold divided by the S&P 500. We've been chugging up here for about a month, looking really good against the S&P 500. We want to see this chart go up. That means the S&P is either going sideways and gold is going up, or it's going down and gold is going sideways, or the best of scenarios here, gold's going up and the S&P 500 is going down. GLD, our put on here, is looking atrocious. We thought that gold was going to have a correction because it was so stretched. That has not happened. It just continues to move higher. So I'm not sure. We're going to wait, I think, another month or so and see how this irons out, maybe late April, early May. But this one, unless we get a correction here, is going to expire worthless. But all of the rest of the portfolio is doing really well. So in a sense, this is kind of a hedge. GDX up 6.5% for the week, coming up on some resistance here around 32. So technicals are really stretched. Would anticipate a correction here. If gold rolls over, this will correct even more. This is a chart that I like a lot here. This is the GDX divided by the futures price of gold. And we've started to have the miners outperform the metal. So if this continues, if we can back this up over a longer time frame, we're at some pretty oversold points right here when you compare the miners to gold itself. We'll go to GDX, and this one is up 7.5% for the week, and looking great. Don't see any entries right now. Loving our entries before. Major support's going to be around 35, which is around where the 200 moving average is. Next level of resistance is going to be around 39, 39.50, something like that, and we're almost there. And this is GDX divided by gold, and we can see this one also, the junior miners are really underpriced compared to the metal itself. So I think we got a lot of room in this one. I think we may even have a monumental run like we did back here from 08 to 2010. We'll see. But we love buying on this end of the chart and selling on this end of the chart. So if this complies, I think the miners are really going to outperform the metal itself. Franco, Nevada had a nice little pop right there. Let me go back to the daily here. Nice little pop for the week. Looking like it might have a little double top here in the daily. If gold rolls over, this should come back down. But we think the new floor is probably 110 to 112, something like that. So a limit order around there, I think, would be prudent if you don't have it already. Wheat and precious metals, don't see any entries. Major level of support here is going to be on the 200-day moving average. That also coincides with the 50 moving average here. That's around $44.50. That's our second favorite gold royalty, and our third favorite right here, our little darling, Gold Royalty Corporation. I love this company. Don't see any entries, but we do have a golden cross here in the daily. Super exciting, super bullish. If you don't have anything and you want to throw in a limit order around $1.80, something like that, I don't think that's terrible. But I would like to see a little bit more correction in this before making an entry. Metalla Royalty. Looks like new support is going to be around 290, 280 in that range. If we go back here, we got quite a bit of support around $2.80. Gold and copper royalty play. Origin Royalties. This looks fantastic. Might have a little bit of a correction here. Might be forming up like a bullish flag. See if we put this up here. Let me get this out of the way. And then we... I'm going to zoom in on this right here. There we go. Okay, now we put the bull flag here and like that. Okay, so if this plays out, we may have a buying opportunity down here around 60, 61 cents, something like that. And if this bull flag plays out, it's going to go up to the upside. Now, Barrick Gold up 7% for the week, moved past the 200 daily, knocked on the door of the 400 daily moving average, looking fantastic. Same with Newmont. Newmont is breaking out, possible bull flag there as well. You guys can probably see the same pattern, kind of in all of them here, forming up the same bull flag. And man, I love this one a lot. Agnico Eagle, not really. This one just keeps going up and up and up, although we're getting pretty stretched in the technicals, so would expect a correction. Usually things don't move up like this in a straight line. So tapping on the door of some real, there we go. Tapping on the door of some real resistance right here, right around where it is, around 60 bucks or so. Yeah, like this one a lot. G Mining Ventures, looks like the cup and handle that was right here isn't going to form out. The handle went too far down. So major level of support is going to be around $1.35 or so, somewhere around that range. This was a tick if you could catch it back on February 28th. But hitting right on the 50 moving average, you know, we're not buying anymore, but you know, if you want some, I think that's a decent level to play it at, maybe like 135. Maybe you get lucky and it gets down to 130. Rio Tinto, possible cup pattern forming up here. We can see it looks something like that. If this continues to go up a little bit and higher, that would be ideal. We'll see how this one irons out, but you know, a limit order around 24 cents, 25 cents, something like that would put you kind of at the base down here. Oops, there we go. All right, and silver, up about 0.25% for the week. So it tapped on 26 and then shot down. If gold rolls over, this will as well. This is looking decently bullish here. Let me look at the weekly. Yeah, it's above all that. Don't really have a bias one way or the other. I suppose down more than up, but yeah, we're going to need gold to really sustain, you know, some highs like this, and then silver will follow, and we expect it to do parabolically. So looking really good. We got a golden cross here in the daily, but technicals are pretty stretched, so I think it's ripe for a pullback. And Alex says, hi Steve, love the weekly updates. Question for you in regards to risk. What percentage of your total investments do you look to allocate on a single limit order for a stock? And how much would you scale this up the cheaper a stock gets? So here might be an example with SILJ. Let's see. Oh, also, do you have any advice on stop losses and where they should be placed? Okay, so basically what we do is, let's say we want to bet 5% of the portfolio on coal, okay? So a lot of that bet is probably going to be in the coal ETF, just play the beta. And then after talking with Matt Warder about some of the best coal miners on the planet, we'd take the second part of the bet and place it on that. So let's say in that second half of the, you know, or either one, you know, I guess what I do is I basically get some starter positions. So let's say I'm going to bet an increment of 100. We'll just say $100 just to make it easy. I'll bet like $5 and then $5. And then as it gets cheaper, then I'll bet 10, 20, 40 up until I've got 100 and I'm fully allocated. And then I just essentially let it ride. So that's basically it. I'll get some small starter positions, and as it goes down, I buy more. And that's where you can really get your average cost down. And then when it does make the move that you're expecting, you can make a lot more. Now, as far as like stop losses, here would be an example. Like when we placed this bet right here at $8, or we got it at 8.02, we could have a stop loss down here around 7. Let me get rid of the volume here, and then it's easier to see. And I'll do that. There we go. So $8 seems to be a pretty good support level right around here, right? So if I put a a line right across here, horizontal line, alternate H, and we can see around $8 it holds some support, especially in the last 4 times, here, 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 and then now right here. So if it breaks below that, let's say it got 5 or 10% below that, then the bet is kind of off. You were wrong. So it's nice to be able to sell out of that and, you know, only lose a small amount. But when you see bets like this, like when we place this bet, it's about 70% that this is gonna hold, right? If the 30% time that you're wrong and it goes down, we don't want to just be stuck in this thing for a while, because this is extremely volatile. And a company like BHP or Rio Tinto, or you know, some of the gold miners that we really believe in, like GROY, we didn't have stop losses on that. We were in this one for the long run, and as it got cheaper, then we bought more. But in some of these trading ones where you know, you could really lose your shorts if you're wrong, we like to have a stop loss down there so we can just get out, save that capital, and deploy it elsewhere. So generally, I do between a 5 and 10% stop loss. But basically what I'm doing is I'm just lining up with the back support, going a little bit lower than that in case we get a hot minute where it shoots down. I don't want to get stopped out. But that's what I'm doing, is I'm just lining it up with back support, going a little bit lower than that, and then setting it. So, you know, I don't like to have it more than 10%, but that's just my kind of general mental rule. If you guys are enjoying this and you like the show and want to support it, there's a link down in the notes below. And thank you to all who have donated. We really appreciate it. Pan American Silver up 9% for the week. I like this one a lot. Technicals are starting to get a little bit stretched, but I think we got a little bit of room to run. Just punched through the 200 daily. Next level of resistance going to be around the 400, and we'll call it around $16, somewhere around there. SILV, Silvercrest Metals, our little darling. We got a lot of support down here around $5. We also have some more around the 200 daily, which is around $5.50. Closed the week at $6.66. Kind of coming up on some resistance here. We can see it right there, kind of a bit of a double top. We'll see if this irons out or not, but we're in this one for the long run with the silver bet. Very leveraged to silver. Copper's flat for the week, still holding above $4. There is this trend line of support. Wouldn't surprise us at all if this comes back down, maybe hits around the 200 moving average, maybe even down here around this upward channel trend line. But, you know, I think copper's probably going to settle down a little bit and kind of follow this trend line like it's been doing. And so we expect a little bit of downside for copper. COPX, possible quadruple top right here, hitting on it right again. Technicals are super stretched in this one. Would expect it to correct back down. We love this one for a beta play on copper, and this is a little bit more alpha here. COPJ just broke through this trend line. That is amazing. It's up, I think it was up about 6 or 7%, something like that. I forgot to write it down. Yeah, awesome. Oh, I'm sorry. It popped 2.5% for the week. It just looks so dramatic because of that last candle. But love this one a lot. Got to see it correct back down, get some support down here to make another entry. But if copper does well, then these junior copper miners are going to do extremely well. And our favorite junior copper miner right here, Arizona Metals, popped up for the week about 6%. This is the one that popped 6%. Looking like it's starting to iron out a little bit of an upward channel trend line right here. So maybe any entries along that point. You know, we missed some back here in the 120s. If it gets back down there, we'll probably place another one. And uranium. We're having Justin Hune on the first week of April. So we'll put up a post under the community tab to submit questions for Justin Hune. So make sure you look out for that. Close the week at, John Quakes is reporting around $89. This one is showing 88, close enough for government work. Down a couple bucks since last week, but we are not worried one bit. When we go to the Sprott Physical Uranium Trust, we are now trading at a 5.36% discount to NAV. So you can get almost $22 worth of uranium for about $20.63. No pounds added, but we don't need them. We have almost 64 million pounds of U3O8 stored, unavailable to the utilities. It is ours. Sprott Physical Uranium Trust looking good. Like our entry points here a lot. We think that the commodity itself is going to be moving up, especially since the majors are not producing what they thought they would. First major producer, Cameco. Don't see any entries here. Pretty much flat for the week. Major support's going to be around $40 mark here, which lines up with the 200-day moving average. 50 moving average is resistance, and we can see it just touched on that and then came back down. Bias is up for next week. Kazatomprom, same kind of thing. Looks like it's hitting in a retracement right here. This could be interesting. Yeah. Okay. All right. So right around, yeah, same level that we were talking about last week, $38.50. Looks like a decent support line if you want to get into Kazatomprom. And URA, let me get the volume back here. URA, still the same thing as last week. We see the major level of support, maybe limit orders around $27. If uranium goes up, this is going to go up as well, so it may not hit, but $27 support for URA, about $47 support for URNM. We like this one better than URA. URNJ, the junior uranium miners, also like this one a lot. Support is around $23. Resistance is going to be around 26, which is that 50 moving average. And UROY, our option is still on. We got stopped out of our regular bet here. But, you know, if you don't have a position in UROY and you want one, the only uranium royalty on the planet, this is looking like it's kind of carving out a base. Pretty interesting right here. We're not adding to this one. We're just kind of playing this like we are SILJ, just running options on it. We'll see how this one irons out. And the U's, UU Energy Fuels popped on Friday. I think we are slightly up on the option. The theta has decayed a little bit, but with that pop, that helped. And we'll see how that one goes. Crude oil coming up on the inflection point that we're talking about. Not that it has to obey this downward channel trend line right here, but it has hit it 4 times. And there is some pretty major resistance for oil around $84. So it's coming right up on that point. We'll probably know next week which way it's going to go or not. If it blows through this, then we can pretty much just get rid of this trend line, and that's kind of now support. And so we'd love to see it move above 84, but our bias is for it to hit this and then move back down. Now, Lazar says, if you do oil price divided by gold, it is stupidly cheap as a ratio. If oil goes back to historical norm, that could be $360 a barrel. Not saying that, but that's a historical norm ratio. Also, you can look at gold divided by silver or crude oil to natural gas ratio, where Nat Gas is very cheap and the cheapest energy source currently. So one that I like here is crude oil divided by gold. I'll pull up the other ones next week, Lazar. But this one right here on crude oil divided by gold, let me go out to the monthly here, and then it paints a little bit better picture. Look at all the support around where we are now. Look at all the price action that hit right around this 0.4, right? Or 0.04. So basically a barrel of oil right now will buy you 0.04 ounces of gold. Pretty incredible right there. Now XLE, this one, we're going to go to the daily, had a monumental run. And if we price XLE divided by gold, this one is pretty impressive. We'll go out to the monthly and we can see that, you know, it takes 1 share of XLE will buy you about the same 0.04 ounces of gold. And then check out XLE divided by the S&P 500. So 1 share of XLE will buy you 0.018 shares of the S&P 500. And look how down this is. Now, if we go back here to 2008, look at the run up that we had here. If we go from where we are now back to the ratio that we had back here in the great financial crisis, I mean, what is that? Almost 300%. We like this a lot, not in the S&P 500, but in oil. And our favorite right here is Exxon Mobil. These guys are just doing amazing. They're keep reaching new highs here, paying great dividends. Technicals are really stretched. We got high RSI, high MACD, high stochastic. So wouldn't be surprised at all to see a correction here. We'll see what crude oil does when it reaches that inflection point, and then that'll tell us what will happen here. Blackstone Minerals, our favorite oil royalty play on the planet. I think we've pretty much got all we want on this one as far as just letting it ride until our retirement. But to keep our monkey brain busy here, we got an option in on this one, and this one is panning out quite well. We'll probably start to make a decision if and when it gets up to about 1650. Yeah, probably around there is when we're going to decide on that one. And for our friends, the Canucks north of the border, it's a boot freehold. Okay, so this is essentially the Canadian version of Blackstone Minerals. Don't see any entries here. Hitting right on the 400 daily moving average, probably going to roll over. Maybe the first entry point is around 14 bucks, which would put you right on the 200 moving average. And Woodside Energy, up about 2% for the week. The option is still on. We contemplated taking profits on Wednesday. We didn't. Option expires in July of 2019. I think we still got room for this one to run. And Jason wants to know about Enbridge. I've been watching Enbridge Energy. Can you tell me, is that a cup and handle base on the 3-month chart? And he says, actually, the 1-year chart too. Okay, so I think what you're talking about, because if I go to the quarterly chart here, the 3-month, I don't see any cup and handle that you're talking about. But if I put it in the 3-month chart over here, I think I can kind of see, I believe what you're talking about, Jason, is this right here. You know, is this a, if I zoom out here, so we'll take the top of the, of this. You don't really want the cup and handle to kind of have the V going down like that. You want it to be a little bit more rounding like the gold cup and handle is. But I suppose you could say that this is a cup and handle pattern. Not ideal that this part of the handle is lower than this. As far as a bullish pattern, we want to see that higher than this one over here. But I suppose this is a rudimentary cup and handle. And if that's true, the way I was taught to measure these as far as upside targets, because he said if it is a cup and handle, what would be the proper buy point? So we could have a run from here to here, which is up, what is that, $3, and then we could project that from here to here. So the upside target would be around like 39 or so. But barring this cup and handle, let's say it's not one, and we're not going to play it as one. What I would be looking to do to make an entry on this, see how the technicals are kind of high, but they're starting to roll over. I'd be looking for an entry down here around 35, 50, somewhere around there. That'll line up with the 200 once it gets there, and the 400 moving average. So I'd, you know, and here's a little box, so maybe you can kind of see it. It looks like it's kind of trading in this rectangle here. And if you can buy towards the bottom of the rectangle and coincide that with the 200 moving average, I think that's a decent entry point. Maybe a limit order around 35, something like that. And Malik wants to know about Peyto. Okay, I don't know anything fundamentally about this company other than it's oil and gas. And, okay, kind of hitting a topping pattern here. So let me zoom out here to the daily. We can get a little more time frame. See how many times it's hit right here, 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 right around where it is now. I'd like to see this come back down somewhere around here, maybe like 11 bucks or so. We can draw a bit of a box here and you can kind of see it. So maybe the first entry point is right around where this 200 moving average is, right around what is that, 13 bucks? One right there, and then another limit order down here around 11 or so, if I was going to get into this one. Okay, and natural gas is up about 6% for the week, still historically cheap. I mean, when we zoom out on this, this is some historic times right now as far as cheap natural gas in America. The way we're playing that is Devon Energy. It's up above 50 bucks now. Pretty cool. Don't see any entries into this. Love that it's above the 200 moving average. Love that the 50 is coming up to this right here. But look at how stretched the technicals are here. Look at the RSI. Look at the MACD. RSI is at 80. MACD is way up here. Stochastic is way up there at 97. I mean, don't see any entries into this. Would like to see it come back down, maybe down here around 44 or so. That might create an entry point. Equitable, we got a limit order in here for $32, probably a pipe dream. Really wishing we had put it in around 33 and then it would have hit, but we did not. Close the week above $37 a share. But if if the gas narrative is going to play out, this one should do quite well. Gustavo wants to know about CLCO, Cool Company. So this one's kind of interesting. Okay, so smallish market cap. 600 million. They just started paying some dividends here and they look pretty good as far as earnings per share, looking great. Price to earnings ratio, dividend yields 15%, but it just started, so you can't go by that too much. Now, as far as an entry point, Gustavo, middle of the road RSI, middle of the road MACD, middle of the road stochastic. So I don't really see anything there. However, if we run a retracement here, we can see that it's hit a couple times in this 50% retracement. So if we were to have a limit order kind of in the bottom range of this right here, maybe around $10.90, I think that might be kind of a interesting entry point. And coal, thermal coal is up about 5%. We're at $132.50 to close the week. Met coal, amazing. Okay, just as Matt Warder predicted, he said once it gets down to $250, we need to start paying attention. Well, boys and girls, we're at 247, so our interest is peaked. All right, down about 10% for the week. This is exactly what we want to see. We want to see this going down, down, down to get cheaper and get us some deals. Look at that. Look at the technicals down here. Just like once it starts to show red right there on the RSI, we start to get pretty excited. RSI is at 6. Pretty cool. Okay, so the coal ETF, COAL, we threw in another limit order down here for 22.10, just lining up with this back support right back here. Hopefully it hits. Glencore's up about 2%, looking fantastic, touching right on the 200 daily here. Then had a reversal bar to the downside. So we see downside for next week is probably more likely than up, but don't really see any entry points into this one right now. We want to see, maybe we can get it coming down a little bit and get some kind of retracement in here. We'll have to see what it looks like. AMR, Alpha Metallurgical Resources. So we got our first entries here at 350, 325. Probably should have had a limit order at 300. That would have hit. We have one down here around the 200 moving average at 265. That's probably not going to happen. I think what I'll do after I stop recording here is move this limit order up somewhere around 300 bucks. And that'll line up with some nice back support right back here. And Danny says, as far as thermal coal is concerned, I wonder if it's a good time to nibble on CEIX. Okay, so that's Consol Energy. Let's see, when he saw it, it was down 8%. So he was seeing it on this day on Tuesday. So that's pretty interesting. Yeah, that would have been a tick if you could catch it, Danny. And I would say probably right around there is what we're going to look at. Let me zoom out. Yep. Okay, that looks pretty good right there. Okay, so see this right around 79.50, maybe 79 bucks, somewhere in that range right there. See, that lines up with some back support there, around there. I would say a limit order somewhere around there. Let me look at the market cap real quick. I forget. I think it's in the billions. Yeah, 2.5 billion. Okay, so you're fine with doing market orders if you just want to snag it. But maybe we're just cheap. But I think a limit order around $80 is probably going to fill, and you'll get it just a little bit cheaper. Alrighty, and Bitcoin has hit 70,000. Full disclosure, we're recording on Friday. We got a bunch of family activities, so we'll see what it does in between now and Sunday. Possible topping pattern. I mean, there's the whole halving story that's coming up. Maybe this will blow through this upward channel trend line of resistance right here. Time will tell. Platinum up about 2.5% for the week. Got above $900. Still think a limit order around 850 is a pretty good deal. The way you could play that is PPLT, the liquid way on the stock market, and limit order around $80 would put you around that same price of the commodity itself, around 850. And Palladium also up 2.5% for the week. Again, when is Russia going to stop selling their platinum and palladium? If anyone knows a secret website on the dark web where we can find out that information, we would love to hear it. But we have no clue. I think we just have to be invested in this beforehand. You can do that through PALL. Same kind of thing as PPLT, except it's with palladium. Or the easiest way, if you want to bet on both of them, is the SPPP through Sprott, the Sprott Physical Platinum and Palladium Trust. I think a limit order around $9 will probably do you well in if there's any hiccup in this market. Highly, highly speculative. Iron ore down about 8%. Like seeing that coming up on some back support right back here. We'll see if it holds around the $100 level. And Kat wants to know about an iron ore royalty. This one was kind of interesting. I had never heard of this one before. This is MSB is the ticker, Mesabi Trust, and basically they have a royalty that is on an iron mine, the Peter Mitchell mine in Minnesota, and basically they collect a royalty on this one. Now, when I look over this chart, I went, ooh, right? So we got a lot of price action kind of around where we are now. Let me go to the daily here. Same kind of thing. See, you can see it's just tested this level of about $17 many times, and it hasn't gone below it since October of 2022. So that's pretty cool. So I think a limit order kind of around where we are now isn't terrible if you know something about this company and believe in it. And also what's interesting on this one, so if we go to this and we look at the chart, this is going back to the 1960s. They do pay a dividend. And so if we adjust it for dividend, the chart all of a sudden looks a lot greater. Okay, so we can see right here, this is the COVID crash right down here in March of 2020. And if we run it down here to the top, that was 350%. Also, we can see that this is a pretty, you guys can probably already see this without me drawing it. Adjusted for dividends, it's hitting right in the Fibonacci. If we take the adjustment away, it is not. We'll have to adjust this back up. So it's broken through the Fibonacci, but you still can't help but notice that there's a lot of back support right around where it is now. I would be looking for, kind of a limit order around $17, something like that. All right, and BHP, the option is still, I'm sorry, it's not on anymore. We closed it, so we took a profit in that. I don't remember what it was. I'm sorry, I should have looked that up, but made out. So we set an order alert right down here for $56. If it comes back down to 56, we might take another option on it. I don't know, we'll see. And Rio Tinto, just same limit order. So our limit order for $62 hit. We got another one in down here for 60 and then one for 58.50, just lining up with back support, nothing super scientific. But we want to see this correct down a little bit before we make another entry. And VALE, Joe Warren wants to know about VALE. Let's see, mentioned VALE. While current price at $12.18 looks appealing, I see a right triangle pattern with flat bottom and descending tops. Doesn't that usually resolve down? Also, it looks like a bear flag forming since December 2023. So I think what you're seeing here, Joe, is I think you're talking about, so we go back like December here, the pull down, and then we draw out the flag. I think this is what you're talking about. And now it's broken down out of that bear flag. So yeah, I see that, you know, now that we're looking at it. Now, as far as that telling us any information after that, not really. I mean, it already did the thing and the pattern played out and it moved. What I see right now is a double bottom right down here. The reason, well, we have an option on this, so I guess we are invested in it. The reason we got out was because of the dam that collapsed down in Brazil. And according to people that follow this more than us, like Doug Silver and Rick Roll, there could be some serious litigation from that. The company is culpable, and we don't know what they're going to have to pay out on that. So we just got out of it altogether until that resolves. But short term, don't mind running an option at all. Probably a little early on this one. If we could see the future, we would have waited for this double bottom and then bought in probably on Thursday. But can't see the future. Crystal ball was broken. Options still on. I think that there's still a really good case that this could pop. I mean, there's a lot of back support right around this $12 here. So if you want to get in VALE, Joe, I think now is a decent time. Look at the technicals, all pretty low. All right, and random options and other companies that didn't seem to fit in any other categories. Our option here on Unity Software is still on. I think this is a straight technical play, and then our buddy Eric is very familiar with the fundamentals of this company, and he liked it for the short term. So we'll see if this one pops. And Bill is interested in PAVE and PPA. He says they're infrastructure and defense contractors. I don't know anything fundamentally about this one. I tried adjusting them for dividends. You can't even tell the difference because they're too small. Don't see any entry points here, Bill. You know, these are just screaming in the clouds. Kind of looks like a NVIDIA chart. We just want to see some kind of bottoming pattern or you know, something. See, like this back here would have been an interesting entry point. See how it just bounced right along the 200 moving average there for like 5 times? Like any one of those, I think would have been a great entry point. You had a nice triple bottom back here. That would have been an interesting entry point on maybe the second one is where you could have taken it and then even hit again on the third one there. If you didn't get it, that might be one. But when it's just screaming higher like this, I'm really not any help. And also PPA, same thing, just kind of running up. Technicals are super stretched. I mean, it is a pretty bullish looking chart. All the moving averages are in sequential order, but entry points that I would see on something like this are right here where I'll draw the line. See how you got like once, twice, 3, 4, 5, 6 right there. I mean, you had a bunch of opportunities to get into it there before it made that nice run up. What is that run up if you were able to catch that from here to there? 30%, a little bit more. Not bad. Not bad. Yeah, I don't see any entries right there. I see what you're talking about. I mean, if we're going into a what's the word? You know, increased turmoil, everything that's going on with the Middle East and around the world, I could definitely see a case for investing in you know, defense contractors, and those are some ETFs on them. But as far as you know, knowing how to analyze those or anything, I have absolutely no idea. Well, I hope you guys got something out of that. If you want to donate to the show, there's a link down below. And thank you for always being here. If you want to sign up for Rick Rule's next boot camp, there's a link in the pinned comment below. I'll also be going out to Boca Raton for the Rule Symposium. I would love to see you guys there, meet you face to face. It'll be a lot of fun. We're going to learn a lot. And thank you for tuning in. Hit the like and subscribe, and share this with anyone that you think needs to hear it. Probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.